Hi everyone, and it's that time once again. It's the stock portfolio review time. So I'm going to share my entire portfolio performance with you over the last month, and hopefully that will give you some ideas of mistakes to avoid, but also hopefully some examples of what good looks like as well. So let's roll that intro and then get started. Start off with the value and the run rate in the portfolio. Now, the end goal, of course, as a reminder, is for me to get to £1 million. A very lofty goal, I admit. It is a very long-term goal, and I'm trying to stay disciplined and show that it is possible for anyone to do this with the strategy and a lot of discipline and being careful. So I really want to get there by 2050 with at least £300 a month going in. And the progress as of last month was almost 45,000. And where we are now is a smidge less than that, 44,701. Certainly that's £3,000 more than the base target for the end of the year, and about 1,200 less than the 2050 stretch target. Now we do have September, October, November, December, 4 months of £300 to go in. So actually, if the portfolio holds its value and I keep my minimum contributions up, that would be bang on the stretch target. But month to month, it's just about £200 down, of which around 500 of that was a performance decrease in the valuations in the market, and there was a deposit of £300. So not too much of a change since last time. So the run rates required, 2050 there, 9.69% a year. Thank you to Patreon supporters. Support is most appreciated. If you'd like to join, discuss stocks, discuss portfolio management, but not for personalised advice, but general discussions, the link shall be in the description. So dividends. Quite a few dividends in this month. Unum Group with the largest at £16, and that's now given me an annualised dividend on cost of about 6.5%, which is pretty decent. British American Tobacco just under 10. Brazil Index 743. And a bit more from Unilever. My first dividend from Williams Sonoma. Then we get to the smaller ones, Citigroup, Amex, and the Australian company, Canadian Partners Group Holdings. So for the month, we're about £50, so decent dividend. So what actually happened in the portfolio in the last month? And actually, it's pretty boring. I didn't sell anything, nor did I buy anything new. We do have the usual monthly contribution into Terry Smith's Fundsmith Equity Fund. So the portfolio overall structure, therefore, is as follows. We have £9,320 in cash. It's quite a big cash position. Again, bigger than I'd want it to be. I prefer to be a bit more fully invested than that. However, I'm not just going to go and buy stuff for the sake of it. It has to be the right investments that fit the strategy. And quality companies certainly is at the forefront of that strategy. £11,500 in that pot. Dividends there, just over 8.5, similar to the managed funds. And then we get to the unclassifieds, which are companies that don't fit my strategy that I happen to own already. So they will be sold in due course. And then Cyclical's has gone up a bit in the last month, 2,600 or so. So the performance of every holding, to be fully transparent. And we start off with that quality companies pot, which is just over a quarter of the portfolio. Bankno's okay, the largest, dropped down a bit this month. Certainly one I expect to get to the 100% club, no question about it. And Dropbox had a good month, up 28% on that in probably around about 3 years or so. Now, Google held Alphabet for less than a year, and that's already at 42%. So I'm absolutely delighted to date with the rate of return. Now, that's not going to continue at that speed, just because the size of the company, you're talking over $1 trillion. Certainly, it's done very well to date. Similar to Adobe, also 42% and a good month for them. Looking at about 2% of the portfolio in Adobe. And then again, Williams-Sonoma, another relatively new addition this year, up 24% in not very long at all. And again, just under 2% of the portfolio. So again, very pleased with that one. These are good quality companies. Unilever's in the 100% return club. Elevance has been dropping off recently, but still over 50% in 3 or so years on that one. Skyworks, about 1.5% of the portfolio, relatively new, up 12. InMode pulled back quite a lot this month, but still up about a third on that one. Berkshire's absolutely motored on, up 91% in 3 years. Just always that thing of, at the time, if I had the strategy in place, I would have had a much larger holding in Berkshire, but this is all about the learning of investing. We're constantly learning, and certainly the portfolio allocation is something that I've picked up. I wasn't doing very well previously. And we've got Kelly Partners pulled back quite a bit this month. American Express, strong performer in 3 years. And Visa is now back in the positive. And last but not least, or in fact last and least probably you could say, Samara is down 11%. Could be another opportunity just to top up that position slightly if that continues. But the recent results, the results rather, have just come out, so I need to review those before making that decision. So it takes us to the dividend pot, which is about a fifth of the portfolio, and Unum Group, the best, second best I think actually performer, but the largest holding there, over £2,500, and yeah, continues to plough forward. One of my favourite companies, well, favourites or certainly well covered, is Aviva, and I know a lot of you watching hold Aviva as well. So do please comment below if you've got Aviva and what you see your position looking like. But for me here, it's about 3% of the portfolio. I'm up about a third, including dividends. Bigger in general, next one long. Not done so well on that before, but the dividend is good. It's a pretty good company. And then Investec, top performer in this section. Dividend per year is over 10% on cost at the moment, and cracking return in 3 and a bit years on that one. BATS, British American Tobacco, always a good holder in a dividend section of a portfolio, so that's just slightly up. US Bancorp, the London Investment Group, which is again up a bit, mainly from dividends. And then BT only up 12% on that. I'm really considering selling BT, although I do think there's upside, but there are better companies out there. Citigroup, which had a pretty bad month. Plus 500, pretty level over the month, but I think this is a little bit underrated by the market. They seem to perform consistently very well. And they've got Direct Line, which I'm almost back to level on, and I really do hope that they can reinstate their dividend at some point. I mean, there was some more negative news the other day. They have £30 million to pay back to overcharged customers. That's probably hit some of the sentiment, but if that dividend comes back in, then there could be a good boost to the share price. And then at that point, potentially time to consider removing them. Duke Royalty, pretty bad month for them, but again, in 3 years, they've done very well. Which then takes us to the managed by others, 20% portfolio. So that's protection for me in case I do very badly. FTSE 100 at 4% of the portfolio. Fundsmith closing in. Then sell Train, another 100% club member. FTSE 250, 2% of the portfolio, as is the smaller companies fund. And we get to the US index, a few years up about a quarter. Let's go through these now. Again, S&P 500's done well in a few years. Australia index up slightly, world index up slightly, and then Brazil index up slightly as well. We get to around about still a 10th, 11th of my portfolio that is actually companies that I wouldn't be buying now because they don't fit my strategy, but I did have them in my portfolio when I implemented this strategy, so they will be sold in due course. Alibaba is quite a big position. I'd be very keen. I think this will be well in the long term. Similar to Corso as well. I've got the position sizing right on this, too big compared to some of the better companies in the portfolio. Cumulus, I think every quarter they just seem to be chipping away. The debt seems to be coming down. I do think the market will recognise in due course their improved position. S4 I think could be a £3 to £4 stock, and I think it's around about £1 at the moment. I think it was £8 a couple of years ago actually, so big fall from grace at least in the market price. Tenant, I mean that's terrible, quite frankly, in terms of performance and Voyager that we have each time there. Then we get to these cyclicals. So I allow myself anywhere from 0 to 10% of the portfolio in cyclical companies to take advantage of very particular situations. Let's say oil price crashes and therefore oil company stocks drop or other such commodities it would usually apply to. And we have a coal company here, Alpha Met Resources, a quite frankly incredible month there, and they are doing very, very well indeed. I'm getting to that point now where really considering selling this. They are buying back a lot of shares, they are doing very well on results, the debt's essentially eliminated, but it gets to that point of how much further can it go with the commodity cycle. And it's a bit of a guessing game as to whether the commodity price is going to go up and down. We don't really know. Certainly I'm considering taking some of the profit off the table here because it's done fantastically well. Intel just edging up, be a bit of a long-term hold. Ramaco, another coal company, not such a good month there on that one, so it's under 1% of the portfolio now. And then Turtle Beach, I suspect I will be selling now. I think the management, looking into it earlier today, the management's just not doing as well as it should be. Ironically, I did sell a little tranche of this a while ago in the 30s at small profit, but I didn't sell the whole thing, and now, of course, that looks like a poor decision in hindsight, and the takeover that never happened as well. I think I'm just going to take this one out. You know, it's a very small value. It's not really going to make any significant difference to the portfolio. So that'll be the next sale. And then some sort of rudimentary points on the cyclical around Bitcoin, Altasource, and Ethereum. That brings us to the end of the performance review. So if you've made it this far, that's fantastic. Please comment below if you've made it to the end. That's really great. And the YouTube algorithm reckons this video coming up here is probably the most interesting one for you to watch next up. Who am I to argue with that?